The following is brought to you by DBFX from Deutsche Bank.
In the retail FX market, technical analysis is one way investors try to anticipate the price movement of a country's currency. Technical analysis offers investors several different approaches to trading.
There is a Fibonacci and Elliott wave analysis, which goes back to the Dow theory that markets move in predictable wave patterns.
Dolan says investors look at these wave counts and try to predict how subsequent waves will play out.
Technical analysis is focused on reading chart patterns and the belief that past price activity will repeat themselves.
Depending how much of a purist you want to be, you completely ignore all of the fundamental information and you're focused strictly on price charts.
Dolan recommends trendline analysis as a basic approach to analyze a currency's price history.
Basically connecting tops and bottoms, drawing the trend lines out in time. There's always a trend line defining any market movement.
Double tops and double bottoms are a way to look at charts.
A double bottom can be recognized as the letter W on a chart. In theory, the currency won't fall below the two lowest points of the W. Lean says a double bottom marks a price where the currency will stop falling and move higher once it reaches a support level. A double top represents what's called the resistance level, that the currency may not rise above. It looks like the letter M. Once the W is formed, investors typically buy. When the letter M is formed, they typically sell.
If enough people are drawing the same trend line, if enough people are focusing on the same support level, there's going to be a market reaction when that support level gets broken.
Dolan says technical analysis works because of the number of people who follow it, making it a self-fulfilling prophecy of trading. Thanks for watching Bloomberg, The Educated Investor. I'm Carol Biaggi.
Bloomberg Educated Investor is brought to you by DBFX, online margin FX trading from Deutsche Bank.